Todd Walsh joins us, CEO and Chief Technical Analyst at Alpha Cubed Investments. So, Todd, how are you thinking about the division of labor right now between the tech market of software versus hardware, and what's most reliable?
Well, Oliver, thanks for having me on, but it's almost like a one-horse pony right now with Nvidia really carrying the day. We've seen that stock break about 200 points up since the earnings announcement and continuing to move off the excitement on that 10-to-1 stock split. We deal with retail high net worth investors, and they're focused on it like a laser.
Yeah, it's cuts both ways. It seems like lately the knock-on effect hasn't quite been there this past week. So, we're down today on a day where some of those giants are down, but I mean, what if some of these other trades come back? Like, what if the consumer holds us in? What if the retail holds us in? Is there a theme in there?
We're involved in the biggest tennis match economically I've seen in my 30, 40-year career with, are we going to have recession? Are we going to have stagflation? Are we going to have the soft landing? And the market's trading off that almost every day. On the heels of that big Nvidia move, everybody's trying to find what else, right? Your guests have been talking about it. You framed it nicely. The semiconductor index tried to break out last Tuesday, kind of on the heels of that big Nvidia move. And even that strong sector couldn't hold that breakout with the weight of the macros kind of weighing down on it.
Right now, where does that macro weight come from in your mind? Is it just the fact we can't cut, inflation's too high?
It's all inflation, what's going to happen in the real economy. The weight of that macro is really driving everything outside of the semiconductor and the Nvidia trade. We've seen the 10-year really have an effect or start to have an effect as it moves above 4.5%, as you can see on your chart. You remember last October, we got to 5%. What was the market doing? It was having a seizure, and the Fed stepped aside and, ostensibly paused. But in the meantime, we've been getting some positive inflation data marginally. Then we've been getting some negative inflation data marginally. Of course, we're all keyed on the PCE tomorrow. If it's, knocking it out of the park coming down, that could be good unless it suggests stagflation on the horizon. This is like one of those 18-part series that just keeps going to the next, to the next, to the next. We haven't seen resolution on that front. And until we do, you talked about Goldilocks muddling along. That may be the case. We're 100% data dependent. You mentioned all these stocks coming out with earnings. We saw what happened with Salesforce, a miss on guidance, and they're just getting crushed. We're going to continue to see that. Earnings drive the day. Nvidia is definitely the stock of maybe the decade here as it continues to build out, and we're watching all that very closely.
Absolutely, stock of the decade, so close to surpassing Apple. Maybe stock of like the generation when we go back to .com. There's really nothing even comparable from a concentration standpoint. The 30% of the S&P now that's in the top 3 to top 5 is even deeper, more concentrated than it was in the 90s. But some of these analogies seem like they might fit. Like many have proposed, this is Cisco back in the day. You've got a chart showing some of the differences, though, which is that the valuation for Nvidia on that bottom panel is still fairly contained.
Well, this is a big deal because every retail high net worth client wants to know, what do I do with Nvidia? If I don't have it, how do I get it? If I have it, do I trim it? We look at the AI infrastructure build out in a very similar way to the PC ecosystem and revolution in the early 80s and the internet revolution in the early 90s. Dan Niles did some great work on Cisco's revenues and valuations in the 1990s. And we think there's a pretty good analog there. Nothing's perfect, but we took a look at forward PE on Cisco throughout the 90s. And as you can see from that chart, it's a little tight. But before the dot-com bubble hit, it was trading pretty consistently towards the high end of about 30 times forward, which is a pretty healthy multiple. So we took a quick look at Nvidia, and it seems to be bouncing between 20 and 40 times earnings. But remember, the revenue increases in Nvidia are substantially higher than they were even back for Cisco in the 90s. But we've got to have some way to manage through adding, trimming, and dealing with Nvidia because, just taking it at first blush, it looks extremely expensive. But we're a little bit more optimistic and going to use volatility to continue to add to that name.
And how do you do that when you talk about adding in? Is it now a sort of pseudo replacement for tech, or how do you balance it kind of with an index view? Because if you're in Nvidia, but then you're also in the index, and then Nvidia is such a huge concentration of the index, how do you avoid clients just being totally levered into one trade?
it's becoming the tail wagging the dog and the dog wagging the tail, right? So the key is just not to get over allocated. We deal again with retail high net worth, so we've got to watch the volatility component. Cisco back in the 1990s would experience 20 to 30% volatility. All these high flyers, we know just from past experience, we're going to see higher volatility. So we've got to balance our need to, be in line with the index or beating them, along with individual clients' appetite for that kind of serious volatility. So we're okay being a little underweighted there and using the volatility that Mr. Market's going to show up and deliver us whenever that happens to increase positions as we can do strategically and tactically.
To connect this with the macro discussion, as the index becomes concentrated, how do you then hedge equity if bonds too are stressed by inflation? Do you think that sort of ballast traditional hedge works, or how do you navigate that?
We're not so focused on using bonds to hedge out that risk. We've just got to roll up our sleeves and do the fundamental work and find other names that can provide some alpha as we move forward through the rest of the year. We've got pretty lofty valuations across the tech front. We've got an election coming up. We've got the uncertainties all around inflation and that kind of thing. We wouldn't be surprised to see some volatility across the markets. And when the Fed pivoted back last November, we have seen the value trade almost keep lockstep with the white-hot NASDAQ 100. And we think that'll continue to be a decent contributor to returns through the rest of the year.
Okay. Appreciate the thoughts, Todd. Good stuff and good timing on the conversation.
Thanks, Oliver.
Appreciate that. Mr. Walsh, CEO and Chief Technical Analyst at Alpha Cubed Investments.